Let's look at how we can use simple confluences to take advantage of the market. When you look at gold on the daily chart, we can see the previous daily candle close bullish. That is one indication that the market is likely to continue the upside momentum, but you don't actually base on that one alone to make decisions. So we can go to the 4-hour, and on the 4-hour, we can clearly see that the market has created this base up. Okay, that gives us this as our demand zone, this zone right here. That becomes our demand zone. So that is also another indication that the market is likely to continue the upside. Now, when we take our Fibonacci, we have to now turn on the magnet so that we can get the perfect low as well as the perfect high right here. Let's extend the Fib to our right. Okay. Now on the Fib, you can clearly see we have this 786 level almost in line with our demand zone. That is another indication that the market is likely to hit this level before we continue the upside. So we have about two or three confluences now, all telling us the market is likely to go up. And now we have a spot where we want to actually buy. But at which price exactly should we execute our buy? That is where the idea of numbers and psychological figures come in. So if you look at this level, okay, when you look critically, we have 1775, right? So the 5.00, that is a psychological number on gold. Okay, we are talking about the 50s and the 100s. So this is a 50, and you can as well see how perfectly it lines up with the Fib level, that is 786. That should give you even more confidence that the market is likely to go up when it hits this level. You have to know you need about 2-3 confluences to be able to execute a trade. Now we have about 4 of them, so you should be able to execute this and not be afraid when market comes to that level. The next thing we can do is to go on the 1 hour and see what the 1 hour is also telling us. If you look at the 1 hour carefully, you can clearly see the market has been creating some higher highs and higher lows. And if we use trend line, let's on the magnet start from this level to that level so that we can now extend. Okay, we don't have to extend it manually, we can extend it using the trading view extension. All right, so when you extend, you can actually see that the trend line also comes to cut the Fib as well as the psychological number right around this level. It is all giving you the confluence that the market is likely to reverse when it hits that particular level. So we can have something like this: market comes all the way down, to this level, gets rejected, then boom, go up. So yes, that is what I want to share with you. These are some of the confluences that you can use to help boost your trading. But currently, when you look at the 1 hour, we have market creating this base down, going to test the supply zone, and presently the market is struggling to create a new low. So what I'm expecting is for the market to break below this level, come all the way into this zone before we start this buy push. You have to follow the market. All right, if the market goes above this level, then there's a possibility that it will continue the upside. So don't worry about what the market will do. Once you have actually identified your zone and all that, you just have to wait for the market to come into your zone. All right, so I'll send this signal to the group. We are going to use pending order at this price. Because we are using a pending order and there's no confirmation yet, you have to use small lot size. So when I send a signal to the Telegram, you should be able to see the indication whether you have to use higher risk or low risk. So I'll let you guys know that in advance. It comes with the signal. If you're not part of the Telegram community yet, click on the link in the description so that you can also take advantage of the free signals as well as the educational content that we send in this group. Thank you guys so much for watching. I hope you find value in this video. Peace out.